Stripe. Let's get under the hood.
March 2026. A Canadian business that builds custom computers posts to an online community. Stripe closed their account after review. Payouts held for 120 days. The community's response was not outrage, it was not surprise. The response was that this is typical procedure. That phrase is the Stripe story. The developer community's favorite payment platform, valued at $159 billion in a February 2026 private share transaction, processes roughly 1.6% of global economic output through its infrastructure, and the community that builds on it has accepted that automated account closure and months-long fund holds are not exceptional failures, they are how the system works. Stripe is what happens when the same machine learning that catches real fraud also catches legitimate businesses in its net, and no one reviews the difference before the money is frozen. Patrick Collison was born in County Tipperary, Ireland, in 1988. His brother John was born in 1990. Both had built and sold software companies before their peers had finished school. The founding insight for Stripe was direct. Accepting payments online was absurdly difficult. Setting up a merchant account required days of paperwork. The resulting programming interfaces were poorly documented, clunky, and required significant engineering effort to integrate. The problem was not payment processing itself. Banks and card networks handled that. The problem was the software layer between businesses and the infrastructure, and that layer was broken. The brothers went through the startup accelerator that would become their first customer pipeline, and Stripe launched publicly in 2011. However, the company that launched as a tool for accepting card payments has become something considerably larger. In February 2026, a private share transaction valued Stripe at $159 billion. The company remains private. Patrick Collison said a public listing is not a priority. The tender offer mechanism allows employees and early investors to achieve liquidity without a public market listing. The valuation trajectory tells its own story. Stripe peaked at $95 billion in 2021, repriced significantly lower during the 2022 correction, recovered to $91.5 billion in February 2025, and then surpassed its own record with the $159 billion transaction 12 months later. In 2025, businesses running on Stripe processed $1.9 trillion in total payment volume, up 34% from the previous year. An independent analyst firm that evaluates payment technology for enterprise buyers named Stripe a leader in its 2026 assessment. The mission statement, to increase the economic output of the internet, is not marketing language. It describes a company that now processes roughly 1.6% of the world's economic activity and is still growing at a rate that suggests the percentage will increase. The developer experience is the reason Stripe became the default choice for businesses that build software. The programming interface is designed so that a developer can go from creating an account to accepting test payments in under an hour. The documentation is treated as a product in itself, with working code examples, flow diagrams, and scenarios mapped to real business decisions. The testing environment mirrors the live system, which means code that works in testing works in production without the translation problems that plague other payment integrations. But the product suite extends well beyond accepting card payments. The marketplace infrastructure handles the regulatory complexity of splitting payments between multiple parties, managing identity verification for each participant, and routing funds according to rules the platform operator defines. The subscription billing system manages recurring charges, usage-based pricing, and the invoicing logic that subscription businesses need without requiring the merchant to build it from scratch. The fraud detection system learns from transaction data across the entire network, meaning every business on the platform benefits from patterns identified across all of them. And the company incorporation product takes a founder from an idea to a registered business entity with a tax identification number and a bank account connected to payment processing in a single flow. Each product is designed to compose with the others. A marketplace can use the payment infrastructure, the multi-party routing, the fraud detection, and the subscription billing as a single integrated system rather than assembling separate vendors. That composability is the reason developers who start with Stripe's payment processing tend to stay within the ecosystem as their needs grow more complex. The account termination pattern is structurally identical to what this channel covered with PayPal, with one difference. Because Stripe serves developers and growing businesses rather than individual consumers, the amounts tend to be larger and the operational consequences more severe. In September 2022, an operator described Stripe deactivating their account and then, after resolution, watching approximately 35% of their client accounts deactivated in subsequent automated sweeps. The amount affected was described as hundreds of thousands. Support could not explain the reasoning. The pattern has not changed since. In March 2025, a business had over €6,000 held after account closure with no disputes, no chargebacks, and no fraud signals the owner could identify. 8 months later, at the time of posting, the funds had not been released. In July 2025, a $45,000 sale triggered a 20% rolling hold on all incoming funds for 60 days. In December 2024, $10,000 was held for 180 days. A commenter confirmed the money came back after the hold period ended. That is the best documented outcome. The money returns after half a year. The fraud detection system that makes the platform excellent for merchants is the same system that generates these outcomes. It learns from billions of transactions across the network to identify patterns that indicate fraudulent activity. When it catches real fraud, it protects the merchant and the platform simultaneously. When it catches a legitimate business, the same automated process runs. The account is suspended, funds are held, and support responds with a form letter. No meaningful human review before the hold is imposed, and no reliable path to reversal after it is. The community has not responded with outrage, it has responded with contingency planning. Maintain a backup payment processor. Never let pending payouts accumulate beyond what you can afford to lose access to for 4 to 6 months. Build accordingly. If you are building software that needs to accept payments, Stripe is the platform the developer community has converged on as the default. The programming interface is the industry benchmark. The product suite covers payment acceptance, fraud detection, marketplace routing, subscription billing, and company incorporation as composable infrastructure rather than separate services bolted together. The documentation is a product in itself. The independent analyst recognition confirms what the community already knows. For the specific task of building payment flows into software, nothing else in this comparison matches the developer experience. However, the platform risk is real, documented, and accepted by the community as a structural feature rather than a fixable flaw. The same automated systems that make fraud detection effective at network scale are the systems that produce account closures and fund holds with no meaningful human review. Stripe has not solved this problem. The community has solved it for themselves by maintaining backup processes and treating Stripe's pending payout balance as money they may not be able to access for months. That is not a criticism of the community, it is a criticism of the platform that made the contingency necessary. Stripe does not have a consumer brand. There is no equivalent of the checkout button that 434 million people recognize and trust. Businesses that need consumer checkout familiarity still need a second provider for that layer. Stripe is the infrastructure underneath. It is not the trust signal at the point of purchase. For businesses whose customers do not care what processes the payment, Stripe is the strongest foundation available. For businesses whose customers need to see a name they recognize before they complete a purchase, Stripe alone is not enough. Use Stripe for building. Keep a backup processor for survival. And never let the balance accumulate beyond what your business can afford to have frozen without warning.